What's going on, ladies and gents? Give me just a minute, get my goodies set up here, and let there be light. All right. I'm getting just a little bit of a late start. Got a little bit of stomach issues going on today. And trying to get my body right for the day. So bear with me just a moment. I'm just getting a couple screens set up over here real quick. And we'll go through the day that was Tuesday and see what's going on for Wednesday. So let me just 1 second while I get this set up over here. Turn my volume down. Make sure I'm up and rolling. Perfect. All right, let's get my chart up over here. Good morning, Alex. Lemon and water. Man, I'm going to have to do something. I don't know. I just had a little bit of a stomach issue, and it's, you guys all know how that is, having stomach issues. So I'll get through this stream for sure, though. I wouldn't miss it for the world, unless I'm in a hospital, right? Morning, Algo Prime Plus. What's going on? Let's see here. Let's get this up and running. All right, perfect. Got my charts up. Whew. Let me see here, guys. What are you guys up to? Any big trades yesterday or any trades going on? I did close out my NASDAQ trade for a pretty nice profit, so I'll get into that pretty quick. Let me see here. Eat less sugar before sleep. You know what? I really don't eat sugar at all. I don't drink sodas. I really don't eat candy. The only thing I have probably more than I should is ice cream. So once in a while, I'll have a bowl of cereal at night. Like, I don't like to eat cereal in the mornings like most normal people do. I guess I'm not normal, because milk seems to always make me sleepy, even if it's like the oat milk or almond milk or, the foo-foo types of milk. I don't know. Dairy products or stuff that's similar to it just make me sleepy. So, yeah, I've never been a eat cereal in the morning kind of person since I was a kid in school. So, I relegate my cereal eat until late at night. Lactose intolerant. Yeah, I think that's part of what it is. I mean, I've never actually been seen, from a doctor to confirm that, but I feel like that's probably what it is. I didn't have ice cream last night, but I did have a bowl of cereal. So I think that's partly what it is, but I'll be all right. I'll survive. Let's see here. Let's take a look at the economic calendar on the day, guys. First thing, got some jobs numbers coming out today. Okay, so today, the red folder events that you see there on your screen in the center, that is the ADP non-farm employment change. Now, that's a little different than the big non-farm payroll that we all look at, which is further down the list. I do believe on Friday. Is that right? Yeah. Friday, we got the big number, right? The non-farm employment change number. So, but nevertheless, a lot of times people get these numbers confused, thinking this is the non-farm payroll, the main one. So it's a red folder event on its own, partly because of that. But anyway, that number is coming out at, actually here in about 40 minutes. And let's see here. Yeah, because keep in mind, guys, it's 6:35 my time. So anytime you see these times on here, it's always Central Standard Time. So yeah, that'll be coming up during our stream. We can take a live look at the dollar when that comes out. And then at 9 a.m., so a little bit after our stream ends, we've got the JOLTS and the ISM service PMI number coming out at the exact same time. So yeah, a little bit dollar heavy this morning. So hopefully we'll get some volatility for the U.S. dollar pairs. So we'll see how that affects the U.S. indices as well. Gold, silver, I mean, all of it. Bitcoin, okay. These numbers have a pretty good effect on them. So that's the main things for the day. Let's see here. Just in looking at some of these low impact events, Germany's retail sales number did come out. Now that wasn't very good at all. They had a pretty big miss. So, while that is just a light impact event, it does affect the euro as an individual currency. Okay, it affects it affects the heat map. So all the 6 or 8 different report releases that gets tracked by this program in determining the overall outperformance or underperformance of a currency. So, Xander, what's going on, boss? You guys are awesome. I appreciate you guys being my founding members, so to speak, on my own solo stream. The 3 amigos, I'm gonna start calling you guys. So good stuff. Good stuff. But anyway, yeah, that's really the main thing there is those dollar reports. Crude inventories, if you're an oil trader at all, okay, that report comes out today. Typically always comes out on Wednesdays as well. And obviously and that's something I'm going to be keeping an eye on because you guys, I don't know if you guys saw that or not yesterday, but there was basically the report coming out about Trump and Venezuela striking the oil deal. Now, how much of that was forced and how much of that was voluntary from Venezuela's vice president that's now in charge? Who knows? Remains to be seen. But yeah, it does look like they struck an oil deal. So we'll see how that affects oil prices going forward. As you guys may or may not know, Venezuela, according to Venezuelan officials, they claim they've got the largest oil deposits in the world. I was just reading an article that Saudi Arabia is somewhere in the 260, 270 billion oil, barrel, region as far as how much they have, but that Venezuela is supposedly 300 billion. Okay. Good stuff. Good stuff, Sanders. It is a pleasure being here for myself as well. But yeah, so apparently they're up to 300 billion, Venezuela. Now, again, that's coming from Venezuelan officials. So who knows how true that is or isn't. That article went on to say that as recently as 2007, they were just reporting that they had 100 billion. So out of nowhere, they've come up with triple the amount over the last couple decades. So anyway, regardless, right? That's something that is going to be interesting to get to the truth by. It's kind of like the gold in Fort Knox, right? When we made a big stink about that last year. It's funny saying last year now, talking about 2025, by the way. But yeah, guys, remember, hey, we want to make sure the gold's there. Is it really there? Is it really there? Well, it's kind of a similar thing with the oil, right? Do we really have that much oil not we, but does Venezuela really have that much oil? So anyway, yeah, I kind of talked about that the other day. They did used to pump like 100, I think it was 100, what was the number exactly? 3 million barrels a day, I think it was. Now they're down to like 100,000 a day. So they basically just don't have the production mechanisms. I mean, all the stuff that we built, what was it, 25 years ago or whatever the case was, to get their oil pumping has started corroding and just going bad. So they just didn't maintain it. They didn't do the PMs correctly. I know I touched on this on Monday, I think it was. But yeah, I guess basically we're just going to, the oil companies are going to be investing a lot of money, get in there and rebuild the infrastructure so that they can get on top of the production again. So again, guys, it's not a political thing. I just look at it in the scope of how does it affect markets, right? How does it affect the price of oil and the other assets? So yeah, oil, I would imagine, is probably going to be pretty crazy for a while. And I was just looking at some potential demand zones on oil last night. It's just too many. It's too many lower lows and lower highs on some higher time frames. So it's not anything I'm too excited about buying unless I were to maybe step up to a monthly time frame and a weekly time frame, something crazy like that. But I don't really position trade like that, like the longer term position trade. So anyway, yeah, other places that need intervention right now. Yeah, there's a lot. Hey, it's a crazy world. We live in a crazy world. But the only thing we can really do is just try to be one of the positives, right? Hopefully, eventually, the positives outweigh the negatives. There are negatives, but that's just the way human nature works, right? Always going to be pockets of poverty. There's unfortunately pockets of violence, all this kind of stuff, takeovers, intervention, like what you say. So all we can do is just figure out how to make money from it. I mean, to the average person that doesn't know trading, it probably sounds like a cutthroat world, which it is. Hey, at the end of the day, when there's a war, when there's a natural disaster, right? There's ways to make money off of it, unfortunately. I mean, fortunately or unfortunately, however you want to look at it. But that's just the way it is. That's just what we're here to do. And remember, when we trade these markets, it's a cog in the machine to help it flow, to help money flow ultimately. So yeah, anybody, I've heard people say that traders are bad people. They make money off of misery and this and that and the other. But at the end of the day, guys, we keep things moving. The big banks, they're the ones that move money around, and we're the ones that, in a way, act as the pigs at the slaughterhouse. If you stop and think about it, the system, the overall system, needs every bit of it, because a big bank can't place an order without us. Remember, they have to have the liquidity. That's just one example, but yeah, we're all important. Even just us, average, normal, everyday retail traders, we have an importance in this big mechanism, called commerce and money flow. So anyway, enough of that. Top setups. I'll get over this real quick, and then we'll take a look at how the NASDAQ fared yesterday. So NASDAQ is still on the top setup. So I'm definitely going to be trying to find a place to get back into that trade. I think who was it? Alex, I think you're the one that might have been the one asking me yesterday about the supply zone. So yeah, I ended up closing it for profit a little deeper inside of the supply zone, right? So we'll go through my mindset on that here in a moment, and just let you guys see why I got out where I got out. But anyway, yeah, NASDAQ still get a nice bullish score. Gold is up there to +7. Let me see. So silver's not on there, but I think it's partially because the big banks actually kind of sold off a chunk of their silver last week. Okay, the last time this report came out, but they bought gold. So I'm talking about the COT report. So take a look at that real quick, because by the way, Friday will be the first accurate COT report to come out in 3 or 4 months, three and a half, I think it is. So it's going to be nice. But if you look at overall positioning, this is institutional positioning, okay, on certain assets. Gold and silver is at the very top, okay? So this is basically saying the big banks are 86% net long on gold to only 14% net short, right? So very heavy on the position trading / long-term swing trading, plays, positions, trades, open trades, right? So that's a pretty big deal. Okay. Why would a position trader, a regular retail position trader, want to go against that when the big banks are the ones that make all the money, right? And again, they use us as liquidity. I just lump us in with all the retail traders because that's really what we are. Unless we're trading a $500 million account, we're pretty much a retail trader, right? But anyway, yeah, that's where they're at. Long, gold, silver. And then as far as currencies go, they are the most net long on the euro. Okay, at 68%. Now, again, this is in the mindset of a position trader, not necessarily. I mean, I'm sure maybe some of you guys do some position trades. Maybe you're in a trade for a weeks or months or something like that. I don't. I mean, I used to. It's just kind of boring to me. I like the action. I like the action, but I don't like the action like a 5-minute trader does. You guys know I like my 1 to 4 day trades max. Or unless you're a NASDAQ trade that you forget to close like I did on Friday, right? That obviously spilled into a few more days. But anyway, the point is, it's nice to know where the banks are heavily positioned on the position side, but it's not really the end all be all for me. For me, it's all about the latest COT report releases. And as always, guys, it's the non-commercials, okay? This is the speculators. So when we're looking at that, as you see, gold, they actually increased from the previous week 0.68%. Okay. So that's not a big number to me. Big numbers to me are up here in the 6s, like over 5, basically. 2 to 5 is like, okay, that's a little bit of an increase to where I want to go potentially look and use that in buying that asset. Okay, in this case, it'd be the individual currency. So just simply pair it with the an opposite currency, one that's weaker, right? So yeah, that really not a big giant change. I mean, yeah, Canada did have a 6% increase. So, this is part of the reason that the Canada dollar right now is the strongest. I mean, it's the strongest because of the fundamental releases, but I should say it's the most appealing to buy, in my opinion, is the Canada dollar. And the big banks agree. Right? They've got a net long, or they increase their net longs. Now, overall, as you see, they're net short 63%. Right. So we go back to the regular report. You can see over here, they are actually net short 63%. But in the most recent weekly report, this is where they increased, or I should say, got rid of, let's see here, got rid of some shorts. They did increase longs, but they got rid of some shorts. So with the way the overall positioning shakes out, guys, it basically just means they had a 6% net change, if that makes sense. There's a lot of parameters, a lot of numbers, but yeah, that would lead me to think, oh, does that mean that they know something we don't? Okay. If they're overall net short on something, and then all of a sudden they are going net long, is this their way of bottoming out and starting to round the corner? Is this their way to decrease their longs and decrease their shorts and start going towards the other direction, right? The swing low point, if you will. That's just one piece of the puzzle I like to look at. Not saying it's the end all be all, but it's just nothing more than another odds enhancer. Let's see here, guys. So yeah, that's basically it on the long side. We go down here to the short side. Look at the Japanese Nikkei. Okay, so this is the same concept, but in reverse. Okay, the Nikkei index. They're net long by 68%, but this week they decreased by 10%, meaning they basically went net short by 10%. So you look over here, it's not big numbers or anything. They increased their longs by 34 contracts. This is the options market, okay? But then they increased their shorts by 1,200. So that's obviously a much bigger difference. So minus 10%. Now, I don't have a play on the Nikkei, but it's just nice to know where did they really heavily favor or disfavor an asset from week to week. This is just one piece of the sentiment analysis you guys hear me talk about. And I talk about this in my shorts videos and other things. Okay, this is sentiment analysis. This is the #1 report in the sentiment analysis camp that nobody else on YouTube, I don't think, talks about. Okay, sentiment analysis is just as important, in my opinion, as the fundamental and the technical analysis. This is the analysis group that's never talked about. So sentiment analysis is talking about the big banks, the COT report, what we're looking at here, and the crowd sentiment for the retail sentiment. Okay. So this is the retail sentiment, right? Where is the average trader? Now we're not looking at the banks and the insurance companies and the hedge funds. Now we're looking at you and me, the average Joe trader on their laptop at home or their smartphone, right? This is what we use for a contrarian signal, because we've all heard ad nauseum, right? 90% of traders lose 90% of their money in the first 90 days on average, right? It's an ugly stat, but it's a stat nevertheless. So this is the other half of sentiment analysis. So big banks and retail traders. So if the average retail trader, as you see at the top for the Nikkei, is 98% long, do you think we want to jump on board with the average retail trader if the average retail trader loses their money? Absolutely not. I love this report because it shows me where the liquidity is, where the potential liquidity grabs are, right? We all hear about liquidity grabs. This is a very good report. This is the retail trader telling us where they're putting their stop losses. So if they're net long, where do you think all their stop losses are? It's going to be underpriced somewhere, right? Because they bought. So that tells me there's a lot of short sell pending orders out there. If there's a lot of short sell pending orders, what do the big banks need to fuel their buy orders? They need sell orders. Okay. So just think about that for a second. Just a 30,000 foot view. Just think about that. Take a step back and just stop and think about that for a second. It's called the Edge Finder, guys. Okay. It's called the Edge Finder. A friend of mine developed this thing a few years ago. So yeah, a1trading.com. Feel free to go check it out. Okay. I'm not affiliated with them. So I don't sell this. I don't necessarily even talk about it just because I'm not affiliated with them, but awesome dudes, awesome company. Talk to me off screen. We could probably, I could probably get you some more info, but yeah, it's called Edge Finder. So anyway, this is, I just thought I would break down the sentiment analysis real quick, just so you guys could get a basic understanding of this tab over here when we were looking at the sentiment. Okay. This aisle up here, or this column. Big banks on the COT, retail traders on the other side. We follow this column. We ride the coattails of the big banks, but we do the opposite of what the crowd is doing. So that's sentiment analysis 101. Okay. But anyway, just getting back to the setups themselves. Let me get caught up on my chat real quick, guys. Let's see here. Attack on Vin was just oil related. Let's be honest. Yeah, Xander. There's probably half the group out there thinking that. Yeah, that it's just oil related. I mean, obviously, you hear nonstop about them talking about the drug side of things, but yeah, look, there's two sides of the coin. I'm totally with you on that. But again, that's not something I necessarily get into or push my thoughts, on. But yeah, there's definitely two sides to that. You can't deny it. That's for sure. Gold recently has been a scalper's dream, Xander. Yes. The way you can trade ranges is crazy. Trading breakouts has become almost obsolete recently for it. Look, yeah, when it comes to breakout trading, that's something that I got into for a short while here a few years ago. But then I started realizing I was chasing, me personally. Because if I'm buying breakouts, well, that's automatically an expensive price, right? So you guys always hear me blabber on about waiting for discounts, waiting for pullbacks, right? If the way I see it for my trading style, by the way, I'm not saying this for everybody, but for my trading style, if I buy a breakout, then I'm automatically not buying in demand, right? Now, I will look at breakouts on my entry time frame. Like you guys know, I trade daily 4-hour confluences. If I'm going down to a 5 or a 15 minute to look for my engulfing candle, well, then that's technically on the smallest of time frames. Okay, that's technically, I guess you could say, a breakout. Is that fair to say? But I do it in the context of the overall higher time frame, the 4-hour, even down to the 1 hour if I'm trading from a 1 hour zone or whatever. But yeah, it's, but I was doing the breakouts on the higher time frames. This was what I was doing. Okay, I was doing this, I don't know, price 4, 5, 6 months at one point, and had some early wins and thought it was the best thing ever. But then the law of numbers started catching up to me. There's a dirty stat in mathematics. We used to use it in bowling, guys. Dirty stat, probably the dirtiest stat I've ever heard. Average is average. So in bowling, right, I averaged 210 to 215. That was my average on all my leagues and tournaments. If I have a couple games with a 250 score, it's almost guaranteed I'm going to turn around and throw something down in like the 150 range. Okay, which is way under my average. But that's why it's called average. Average is average. I can feel like I'm on top of the bowling world with a couple 250 games, but there's sure to be a 150 or 160 game coming right after it, dropping my average. So anyway, yeah, the average has finally caught up to me on the breakout trades, and it just was not working for me. I wasn't doing it right or something. But that's when I got back to being serious about supply and demand, because supply and demand is where I got my start. Okay. I got my start on it. Now I was still buying supply and demand zones when I was doing those breakout trades, but I was just adding that as just a second, a second entry, a second trade. And again, I had that early success, and then all of a sudden I couldn't win a breakout trade to save my life. So, so I shit canned that idea, stuck with my supply and demand because that's where my personal edge is. That's just me, right? So anyway, guys, let's take a look at some setups. Gold, NASDAQ, that's the only two bullish ones I've got. So let's go take a look at those on a chart over here. I'm sure my chart's still up and running. Okay, it is. Good deal. Let's see here. Gold. All right. So where are we at with gold? Yeah, I got to admit, guys, when price was down here this past Wednesday, I was just starting to lick my lips a little bit, lick my chops, right? Because I was keeping an eye on this daily and 4-hour demand zone confluence down here. This is pretty. I like this. Okay. Daily 4 hours inside of the daily, had a little bit of a gap above it, exiting price, right? So I was all waiting for that. And then all of a sudden, then you can see towards the last day or so of the year, it just flipped around. Now, when it flipped around, it did make a little bit of a double top on the smaller time frame. It made a new low, and then it broke structure. So that's currently where we're at. When it broke structure, I was basically at the waiting on a pullback down here, okay? Because this is the Sunday open, Sunday for me here in the States, guys. Sunday open and gapped. This is what they call a runaway gap, okay? Runaway gap. So it's gapped up, and in the wake, obviously left the gap, but you got a nice demand zone under. So this is really ultimately my favorite spot to buy gold if I'm looking at the discounts, right? The discounts. Hi, Sherry. Good day to you all. Good day. Gold head and shoulders, cherry. 30 minutes. Yeah, let's take a look at that. Yeah. I mean, that's definitely, you could definitely call that a head and shoulders. I mean, let's take a look at this. What's going on with my chart? Yeah, I'm not sure exactly which one you're looking at, but yeah, basically something like this. Is this what you're kind of looking at? Something like that. I'm not the best drawing at head and shoulders but I guess you could look at that. Something similar to that, right? Yeah. I mean, I'd be fine if it played out like that, because if it plays out like that and drops, well, guess what? I'll be waiting for it with a buy order down here on the demand zone. Now, you guys see I put an alert right here. That alert is actually coming from the 2-hour time frame. Now, I'm going to be very skeptical with this 2-hour demand zone, though. This one right. Oh, come on. What's up with my computer? This demand zone here, okay? This is the one I'm looking at. So a nice volume spread analysis candle coming on that leg out. I like that. Fill the gap. That's right, Xander. That's what I'm waiting on. But the only reason it wouldn't come and fill the gap is because it's obviously the most bullish asset right now. Oops, I didn't mean to do that. I knew that was going to happen. So I have my chart set up over here on my actual trading computer. And every time I click on trading view on one or the other, it kicks me out of the opposite computer because it only allows you to stay logged into one device at a time. I don't know if you guys knew that. So if you have two separate computers or whatever, trading view will not allow you to do that. Now, I don't know if it's because I have a premium membership or what, but it's just kind of a pain in the butt because I constantly am flipping from computer to computer depending on what I'm doing. And I always have to click the button just to reload it. So it's kind of a pain. But anyway, but yeah, let's fill that gap. Again, this zone up here, I do want to watch it, though, just to see how it reacts with this zone. Because, again, I like the volume coming out of it. And I think that at this point, we went 3 units. So if the zone itself is 25 points, what's 25 times 3? 75. Okay. So we've went 79 points. So we've went 3 units already. So to me, this now qualifies as a pretty decent demand zone. I say decent because what did it bounce into? Bounced into a supply zone. and a higher time frame supply zone at that. So if I'm looking to potentially buy this 2-hour demand zone, do I think the 4-hour supply zone is going to potentially be stronger? Potentially. So do I want to put a full risk trade on this area? Probably not. Okay. If I get a bullish engulfing candle, if I get a volume spike, if I get the breaker structure that you guys like me drawing up periodically, okay, then that's a different story. But yeah, definitely a confirmation order. And honestly, guys, down here, this is even going to be a confirmation order. Now, this would normally be a limit order for me. Or, if I'm going to sleep and I'm real close to a zone that's farther away, it's closest to the origin of the strong move up or down. Okay, oftentimes I'll just put a limit order on it because I feel good about it. I don't necessarily feel good about this one just because of the fact that the volume wasn't the greatest. The volume spread analysis candles, they were pretty small. They were pretty narrow down here. I don't like that. I like to have some activity going on, showing that the big banks, who are the ones that move markets ultimately, are getting active, are getting orders loaded up in there, right? Before they allow it to go, to trend, right? So when I see a blue candle down here, or a small candle relative to the previous candles, that sounds a little bit boring. Now I'm still going to be excited about it because we got that gap. It's a strong gap away, right? I mean, that's 4-hour time frame. Go down to a 1-hour, you can see a little bit more what I mean. So this is our zone here. Look at the candle size down here. It's not very big. That's tiny. That's kind of lazy price action. And then obviously the Sunday open, it's going to be kind of lazy. You guys know how Sunday opens are, or early Monday, depending on where you're at in the world. There's not typically a ton of volume right away, right? It takes some time until Asia starts popping. So anyway, I'm still going to keep an eye on it. But first, I just want to see what happens if and when price comes down here. But I'm not going to hold my breath because, again, it's already hit that higher time frame 4-hour supply zone, as you see right here. Excuse me, I got the hiccups. And partially aided by Sherry's head and shoulders, like she said, right? Head and shoulders. I mean, if the head and shoulders part of the pattern works out, well, this thing could very well drop down here, complete the rest of the side of the body, right? So yeah, just a lot of things in the way here, I think, of this demand zone, but I still want to see what happens. And partial position. You guys know I do 0.2 to 0.5% per trade risk. This would definitely be a 0.2%. This would definitely be on the lower end. Down here, 0.3, 0.5, 0.3, 0.4%. But again, I'm not doing 0.5 down here because, again, the volume isn't the greatest. I didn't see a ton of institutional activity. Right? And understandably so. It's the end of the day. Okay, that candle was formed at the end of the previous Friday. So, yeah, we're going to stay the hell away, for me personally, away from the 0.5s. 0.3 or the 0.4s, right? Probably 0.2% here and maybe 0.3% down here. That's my risk if I'm being transparent with you, right? So anyway, but yeah, there's really not a whole lot to add on gold. Again, the banks favored them because you guys saw the COT report with me on the previous reading that we do have, that they increased their net long percentage. So ultimately, yeah, I like gold going up and breaking through some more highs, some more all-time highs, just like it's done forever, right? But and then something that would make this whole picture even stronger, in my opinion, is if we break through the all-time high and then get a retracement to a newly formed demand zone. So let's say right here where price is, if we had a couple big green candles that closed up here, okay, anywhere up here, even if it's by 1 point above this high, close up here and then retrace, that would make a demand zone look even better, because then it has shown me it's broken through a 4-hour supply zone there, and then the rest of what was a 4-hour supply zone for a very short while. And then the all-time high, the 52-week high, all those highs, right? Break up there and close and then return to price. Ooh, mama. I would like that. I'd be okay with that. Would love it. But yeah, not a whole lot more to add on gold, in my opinion. So we'll just see what happens. Just looking at silver. Hold on a second. Okay. Just making sure my goodies came back on. Okay. Yeah, guys, we got this like 2-hour supply zone that we're bouncing into. So same thing. We're buying at all-time highs up here. We're buying into overhead resistance. We're buying into overhead supply. I'm not really too excited about buying here. You guys see, I do have an alert set here. This is similar to gold. Okay, I got this demand zone here, but ultimately there's the gap below. Right, I haven't even drawn it up because silver's kind of been bouncing on and off my list this week. But yeah, this is obviously another demand zone. I just didn't draw it up yet. Okay, we got a demand there. Again, that's the demand zone before the opening gap. So that is, it's really for gold and silver the same zones, right? You guys see the two zones, zone, 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 zone. Similar situation. I just give the nod to gold because, again, it's giving me the bullish reading. Silver's not. In fact, if I turn on my neutral scores, I think silver is right here. So yeah, so silver, as you see, it's a +4. So it's neutral, but I just need another pointer to a strength. Be excited about it. I need as many odds enhancers in my favor to be excited about trading something. Right? And obviously anything that's down here in the very small numbers, you guys, it's just not even worth looking at. Okay. So anyway, get the neutrals taken back off real quick. That. Get back here. Well, we had an alert hit. There we go. Let's see what we got, guys. Okay. Euro Aussie. I got that on there twice. All right, let's take a look. Now, Euro Aussie is giving me a you know what? It fell off my list. So it's actually back to neutral. Okay. So this was giving me a bearish reading, but it's now giving me a neutral reading. So I'm going to ignore it now. I was just looking off screen here at my scores. So it's a -4. Okay. So I'm automatically probably not going to have any interest in shorting this market at the moment. Let's see what underneath demand zones I have to fight through. Okay. You guys see I drew this little puppy up way back here for May, mid-May, early mid-May. And I just bring it forward. Got another one deeper down here inside of that's a weekly demand zone. So let's go all the way out to a weekly for a second. Okay, this is a weekly time frame. Okay, at a demand zone here. Look at that. Look how strong that is. Look how big that gap is on a weekly time frame. That's a big 1 week gap. Okay. That's a liberation week, right? Liberation period. So there you go. We're just now getting back to the start of that on the Euro Aussie pair. So weekly demand zone. Okay. The higher the time frame, the stronger the zones are. Remember that. And now we've dropped in to we didn't exactly have the true definition of a daily demand down here because all these candles overlapped each other. Okay. These candles overlapped. I didn't really see anything on a daily. So you flip down to the 4 hour, and that's where that green candle comes that I just moved forward. I believe that's a 4 hour. Let's take a look. Yeah, here you go. Okay. 4 hours, 4 hour red candle before the big strong move up. Okay. That's where I wrap my rectangle around. The volume spread started picking up as well. Okay. The volume increased. So that's nice. I like it. I like that zone. Now the goal here is to short the market though, right? So let me ask you, do I want to short the market after it hit that 4 hour demand zone? Nope. But just for kicks, let's go down to some smaller time frames and see what time frame I made that zone on. Okay. Looks to me like it was a 15. So there's a 15-minute. Now the gap was terrible, right? Terrible gap. And then obviously you drop down to a 5, and that's where that white line lies right there, right? 5 minutes. So we're technically in that supply zone now, but all bets are off because we hit that 4 hour demand zone. So as always, to me, a 4 hour is going to be stronger than all these 15 and 5 minute supply zones I just found. Right. So yeah, pretty much going to ignore it. We'll let it do its thing. Really, the next higher move I do have another supply zone up here, just a little bit higher, not too far away. But I would feel a little better about this one because by the time price gets here, it's already made a big move, a big bounce off of that demand zone. We are in the context as well of a downtrend, a bunch of lower lows and lower highs. So yes, I expect this to miss this much, but once we get up here, I got to keep in mind we're in the context of a downtrend. We are at a -4, so we really just need one more point of weakness for the euro or one more point of strength for the Aussie dollar. And that would make this potential short sell look pretty damn good, you got to admit. But it's a no play. It's a no go at the moment. So I'm going to ignore this zone. What I'm going to do is just put an alert up here, just underneath that supply, just so I can see what the score is. What's my fundamental and sentiment reading, if and when price gets up there. So we'll just throw that out through the rest of the week. I always do my alerts week to week. I clean them up over the weekends. That way, when the market opens on Sunday, which is when I do my Sunday video, my Sunday long form video, talking about the top setups, at least for the early part of the week. That way it's all up to date. So yeah, you guys, that's really it. There's really not a whole lot else left to do on the Euro Aussie. I mean, I could sit and watch this thing on a small time frame to see if we get the bearish engulfing candle to short it. But I'm not interested because it hit that higher time frame demand zone. And it's not that far away, in my opinion. From here to here, I mean, yeah, or I should say from here to here, that's only about 40, 50 pips. Well, I guess we could just measure it exactly. Yeah, so the proximal line there to this zone, or to where we're at now. So we're just 70 pips, but to the zone itself was 60 pips. So yeah, that sounds like a lot of pips, but after a bounce, I don't think that sounds like a lot. If we go to this supply zone up here, that's 120 pips away. Now, how many pips does the Euro Aussie move on average per day? I don't know. Let's take a look. Let's see here. Let's take a look. Euro Aussie. Okay. ATR over here. So that thing moves about 100 pips a day, 99.5 to be exact. Okay. 100 pips. So yeah, I would expect it could potentially, I could see that moving up. So think about it. It moves 100 pips a day. And the zone itself is only, so it's 100, again, it's 120 pips away. So that move is easily made within a day, especially after bouncing off a demand zone. What time did it hit this demand zone? It hit it last night for me at 10 p.m. So by tonight, I could see price up here. Or let's just call it, let's call it the morning of the day after that. Tomorrow, basically. So within 24 hours, I could see price coming up this high. Okay. So we'll worry about that zone at that time. But yeah, there's really not a play right now. I just think this is too low on the curve to be shorting. I'm shorting in a very cheap spot, remember. I'm shorting where people want to buy cheap. Okay. A lot of them. So I'm just really not that excited about it. Oh, there goes my chart, guys. Let me get my chart up. Get my chart back up for you guys. Yeah, let me know if you guys have any items you want me to look at, by the way. Yeah, camera. Yeah, I gotcha. If this is the worst thing I have to do with using YouTube Studio, I guess we're doing all right. Because I have noticed about, once or twice a day, it seems like it wants to lose my camera. But it sure beats fighting that other program I was trying to use. Which I'm supposed to get some teachings on at some point anyway, by the way. But it's just a little easier using the studio now that I'm kind of used to it. It's almost like if it ain't broke, don't fix it. And to me, if the camera goes down once or twice, it's almost like, okay, big deal. But we'll get that. I'll get that fixed eventually, guys. I got a lot of moving parts right now outside of trading. So I'm just trying to get everything kind of settled down a little bit to where I can, really, really, really focus on what I'm doing here. So, but we'll get there. We'll get there because I love this stuff too much, and I hope you guys do too. Let's see here, guys. Euro Aussie. So yeah, I'm pretty well done with that. Now I did have your dollar Canada dollar hit one of my short sell alerts as well. I think this hit last night when I was going to sleep. Yeah, this hit. Oh, actually, no, it hit. Well, it hit my alert 7 p.m. for me last night, but I always set my alerts just a little bit underneath the supply zone or just a little bit over the demand zone. So it hit my alert, but it didn't actually go into the zone, as you guys see. So it missed it, even though it hit my alert. So I just reset an alert. Well, I reset a second alert to go to the proximal line of the supply zone on this asset, the dollar CAD, which it hit. But this is for me where the break of structure starts working, right? So let's think about this for a second. We had price go up and chew through this supply zone I was watching and this. So it chewed through all these supplies. And I didn't have any interest in this area anyway because of all the congestion preceding it. So at this point, I need to actually delete some lines. Let's get rid of that line, that line, that line, and that line, and that line. There we go. Get rid of some of that nonsense. There we go. I'm going to leave this trend line, though, because I want to see how it interacts with it at some point. What's this line over here? We'll leave that one there. So yeah, guys, basically what we're left with is this 30-minute supply. So if we take a look over here at this zone that I drew up, okay, we have, and that's not a 30. I just lied to you. It's a 1 hour. Here we go. So we've got this 1 hour supply zone right here. Okay, this supply zone right here broke through this structure down here on some pretty good volume. What do you guys think about that red candle? Let me know what you think. Is that a pretty strong candle? Exiting this supply zone, exiting this area, this consolidation. Looks pretty strong to me. That's a lot of it right there. So I have to keep an eye on a spot where volume just absolutely jumped out of the roof, right? Whether I'm using that as a point to enter a trade or a point to exit the trade. That's important. These volume spread analysis candles, they're just as important on an exit. It's not all about the entry, whether I'm buying or shorting. It's the exit too. Because I want to know where the institutional supply and demand started kicking in. So anyway, I like the area, but you guys see I have a white line drawn up. So that's a smaller time frame confluence, right? And we have not hit it yet. That's the point. We missed it by just a handful of pips, like 2 pips, 3 pips, something like that, before it fell away again. But I'm glad it did this. This is perfect for me, guys. This is absolutely perfect because on a smaller time frame, we've broken this structure, have we not? We broke that structure to the downside. So this just simply tells me, hey, we bounced into the bottom of the zone. But you guys know I like the confluences. The confluence isn't for another 3 pips. So now that we've hit the zone itself, the very bottom of it, and we've broken the structure, this to me says, okay, that zone has got some kind of muster to it, something, because it was able to break a structure. So now all I need is a retracement back to the deeper part of the zone, okay? So all I'm waiting for here now is retracement to the white line. And we could look to possibly take a short. Now, we could take the short, but what have I got underneath that might cause problems? Got that 1 hour demand zone right there, don't I? So this is where I have to measure. And this all takes place before you even pull the trigger on the trade. Yeah, I have to measure now. Let's measure my supply zone from proximal to distal line. What was that, 15 pips, looks like? What's 15 times 3, 45? Do I have 45 pips of profit on the opposite side? I do. Okay, it's actually 51, 52 pips to that underneath demand zone. I have to have at least, for me personally, for my set of rules that I created and wrote for myself, I have to have at least 3 units of profit for every 1 unit of the zone. Okay. So that gives me my 3 to 1. So that tells me that, yeah, when price comes back, let's hitch a ride. Okay, let's go down to a 30 and a 15 and see what time frame that was, because I don't remember what time frame that. Okay, so it's not a 30. Let's go to a 15. I just want to see which lower time frame I had for the supply zone confluence. Okay, it's not a 15. So I think this was a 5. So let's go down to a 5. Sometimes I draw all these lines and I forget which time frame I drew it on, right? Yeah, here we go. Here we go, guys. So here's our 5-minute time frame. And we're looking at that red candle right there. Okay. Again, all these confluences have mandatorily got to have a gap. So there's my 5-minute gap. Now my 30-minute had the gap, or 30-minute, and now I got a 5-minute. I personally have to have at least 2 gaps, at least 2 runaway gaps. Okay. That's my personal goal. This is what keeps me safe. This is what's, guys, I've had like a 65% success rate on my trades lately. It's getting better. And it's all because I'm focusing more on the strongest supply and demand zones and avoiding the weak ones like the plague. And this is a big part of it right here. Do I have 2 or 3 confluence points? Do I have gaps for every single one of those confluence points? If I do, whoo, it's so tasty and I jump on it. Okay, so there we go. Basically just waiting for a retracement of this candle. Now we had good volume there, okay, but it did, I gotta be honest, the volume was really strong in here, no doubt. But it did start to decline by the time we got down to this candle, right? So this is just one piece of information I want to have in the back of my mind. Hey, it was strong for a minute. There was a lot of institutional activity there, but it did get quiet down here pretty quick. Okay, you guys see red candles to yellow candles to green candles, and obviously to blue candles. And this is obviously, guys, taking place towards the end of the New York trading session as well. So that's just another thing to keep in mind. I mean, this was basically formed right after the lunchtime doldrums ended. Okay. So do I want to be super excited as opposed to a zone that was created during the New York-London overlap? It's just there's no right or wrong answer, I don't think. I mean, there's probably a right answer, but it's just one piece of information to keep in mind. Just like I want to see what the retail sales number looks like. Just like I want to see the PMI data, right? The CPI, everything. It's just one piece of information by itself. But when added to everything else, guys, that's where we start to have a formula. That's where we start to have an algorithm with the fundamentals, the sentiment, and the technicals like we're looking at. So yeah, that's where I'm looking at. Not really anything to do on this at the moment. It is in an uptrend on a 1 hour, so I've got no interest in looking at this on a 5 or 15-minute time frame. Yeah, if price comes down to this 1 hour demand, perhaps I could buy to sell. Okay. But I don't know if I want to chance it because it did technically bounce into the proximal line of the supply zone. So do I want to fight that and see that, basically that would be a play like this. It comes down, we buy and then exit the trade and then turn around and get into a short, right? So we're basically making money on the way up and making money on the way down. I've done it a handful of times. It's really counterintuitive to the fundamental and sentiment process that I really care about. But I have done it a few times and it's worked pretty nicely. So I don't know how much of that is just luck or just saying, oh, the retail volume is actually going to help me here. I don't know. But it's not anything I'm willing to put some major risk on. Maybe just tiptoe in a little bit, 0.2%, 0.1%. Okay. So anyway, I think that's basically it for dollar CAD. Guys, I do have about 30 minutes. So if you guys would just still chime in, let me know you're there. Let me know what you guys are looking at. Okay. I would like to start looking at other charts of what you guys are looking at. What are you looking at? Maybe why are you looking at it? And we can I can just be kind of a non-biased asset for you. Okay, I can at least give you guys levels of supply and demand to look at, regardless of what your trading strategy is. So just think of me as like a set of guardrails for you. Hey, what are some potential red flags to look for if you get into this trade or that trade. Where is price likely to turn around on some higher time frames? Okay, Coach Richard did an excellent job on that. That was on me with the Forex fire sessions. I loved it because he's looking at all the pitchforks and the higher time frame potential support resistance lines, right? Dynamic support resistance. So it was a big help even for me. So likewise, you guys, obviously we do things a little different because I'm looking at the zones themselves, but I can always look and see. So yeah, Euro pound. Let's take a look at that for you, Alex. I mean, I do have a few other assets. I'd like to try to get to a trade today too. So we'll see what we can come up with. What are you looking to do, Alex? Are you looking to buy this, sell this, breakout? No, you do the supply and demand zones, right? That's what you're learning. I do believe. It's been a while since I've even looked at this because look at all these old drawings I have up. Let's just look in the time machine here, guys. Looks like I drew up a daily demand at one time that worked out pretty well. Push price up. What else did I draw? A supply zone. Look at that. Did that work out pretty well? Sure did. Hell, even looking at the smaller time frame at the very top. Look at this. What did I have? Oh yeah, this is 4 hour. Is that a 4 hour supply zone? Looked like it. Look how wonderful this worked out. Look at that. Okay. It's old news now, but it worked twice. And the bottom fell out. Beautiful. And then we even come down to this demand zone. We worked through most of it, but then it turned around and got that big, strong bounce. This demand zone worked even after hitting this higher time frame confluence. So you guys hear me all the time saying the higher time frames are stronger typically than the lower time frames. Well, that doesn't mean it can't get a nice bounce. Okay, and plus this was a 4 hour, I guess. Let's take a look at that. Take a look at that real quick here. Yeah, which I would have never bought this one in a million years anyway. Oh, that's why. No, it did work out, guys. Look over here. So every single zone you see on here worked out. Okay, I drew up this zone down over here. Did it hit? Looked like it hit right here, didn't it? Look at that. Just barely touched the proximal line and just lifted off. Well, there you go, guys. The power of supply and demand zones. Okay. But anyway, they're all old news at this point, so let's get rid of it. Get some fresh blood on here. I'm just gonna delete that too. Let's take a look at this for you. Wow, the power. Camera, get my camera back up. All right, guys. All right, so Euro pound, guys. Clearly, this is a downtrend, I would say. Now, have we bounced? Oh, look at that. Bounced into a demand zone, didn't we? Okay, this is a daily demand zone. Now, why did I draw that light colored? Here's why. So if we go back in the back machine, you guys see this wick did come in and touch. So because it touched even just that little bit, me personally, automatically going to draw it just a little bit lighter of a yellow shade, just telling me, hey, this thing's been mitigated or touched or whatever. But in the grand scheme of things on a daily time frame, really wasn't that much, especially if I'm trying to short this market because it's clearly giving me a downtrend. Okay. Now remember, if I'm shorting something, if we're shorting something, this is what we want to be. This is always the first thing I look at. If I'm trying to short a market or buy a market, where is the opposing zone? So if I'm trying to short and supply, where's the opposing demand zone? If I'm trying to buy and demand, where's the opposing supply zone? That's always the first thing, because first of all, I want to map out, man, am I getting 3 units of reward to the 1 unit of risk potential? So right now it's really, I definitely wouldn't want to be shorting anything here, I guess is what I'm trying to say. Now, let's look up and to the left. Do I have an overhead supply on a daily? Yeah, I got one there. You could call that a daily supply. Now the gap was terrible. So there's really, yeah, I would just leave it there because this is kind of the overall swing high if we go down to some smaller time frames. So let's drop this to a 4 hour. Where's a 4 hour gap? Do I have a gap here anywhere? Okay, efficient market. These all candles all overlap, candles to the left and the right. Efficient market. Oh, there's our first inefficiency right here. It's not in the daily, but it's kind of standing alone on its own over here. And it's really kind of ugly too, to be honest. But it is a supply zone nevertheless. Volume did kind of start picking up. Okay. Volume bounced into the daily demand and just kind of got lazy and went sideways for a couple of days, did it not? It's been sideways ever since the that initial Sunday drop that we had. So that just goes to show the daily demand stepping in and saying, ho, 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 hold your brakes, not letting you pass. It's the gatekeeper. But yeah, 4 hours. Let's drop that to a 1 hour. Remember, everything divided by 4, typically, okay? Or whichever makes the best looking picture. And I think I actually like my confluence on this red candle right here on a 1 hour, because look at the gap coming out of it. Is that a good gap relative to the size of the candles? I would say so. Okay. So I got a 4 hour, 1 hour confluence, and I've got a gap on both of those time frames. And just for kicks, guys, I always like to divide it by 4 again and see if I have another gap. Just kind of a tertiary, that's a word I've probably never used in my life. A tertiary confluence, right? A third confluence. Do I have a third confluence with a gap? It looks to me like, and I'm just going to steal this one. So this is all efficient, unfortunately, because I wish they had a gap up here, but it looks to me like the only gap I have is going to be right here. Right. Is that the gap right there? Yeah. Well, hold on a second. Let me get this moved. Yeah. Okay. Yeah. So I was right. So there's a gap right here. It's not big. It's not sexy. Okay. There is another gap down here, though, if we were to move it just to the next candle. So this is a gap. Is that a gap? It's a gap. But it's not inside of the supply zone, which, hey, we're back. There we go. Sorry, guys. Sorry about that. That's the gremlins hopping in and stealing us away for a second there. I think we're back now, though. Okay, good deal. I see my thumbs. Awesome, guys. So yeah, just to put a button on this thing, I do have the gaps on the lower time frames. They're just not inside of the main zone itself. So that's just a little bit of a bummer. That's a -1 in my book. This is where if you're real aggressive, if for a real aggressive trader, okay, there's still a way to play it. It's just I don't think the greatest because the gap is small. But you can always wrap a supply zone around the last inefficient candle like this and make that its own zone, meaning, again, aggressively, you would just put your stop, instead of putting your stop loss up here like this, okay, instead of doing that, which means you're incorporating the whole zone, well, now you're incorporating just the smaller time frame zone itself as far as your stop loss, right? I think that's way aggressive, even for me. And I've been doing this 12 years, guys. Even that's aggressive for me. But that would definitely increase your reward, right? But it's kind of a gamble because for me, I like to play it safe and incorporate the rest of the higher time frame zone as far as my stop loss. Yes, it's going to decrease the reward to risk, but all in the name of safety. Now, the only reason I would even consider putting my supply zone here, my stop loss here, is because, again, that's an efficient market structure. All these candles are overlapping each other. Banks typically like to look for the first inefficiency and go with it. Well, if they go any higher, there's no inefficiencies. Now, we could go down to a 5-minute time frame. Let's do that. Do I have a gap on a 5-minute time frame? Right? Even on a 5-minute, I don't. Right? So it just overall is a little bit sketchy. In fact, I don't even know if we have a gap at all. Do we even have a gap at all? Let's look. Gap. Yeah, ugly. Because, I mean, technically you could call this a gap right here. Okay. that's as tiny as it gets, isn't it? That's not enough to get me out of bed, guys. I need gap. I need bigger gaps like this. Okay. Something like this. When it's something like that, that's just not appealing. It's not showing it to be very strong. Because I have to have I need, almost mandate an expanded range candle coming out of that supply zone or demand zone. So yeah, this whole area for the euro pound is just a little sketchy to me. Okay, so probably would want to wait, see, and again, we don't really have a 4-hour. So really what this all boils down to is I think I just need to break a structure of the downside, meaning let's break through the rest of the daily demand. Yeah. Okay. So you're asking as far as buying. Yeah. Well, let me ask you this. And this is just, this is just the kind of the way I think is we're getting a downtrend, right? So would that kind of be catching a falling knife? Right. It's just something to think about. I'm not saying it's the right answer or the wrong answer, but me personally, I wouldn't want to step in front of that. Because look at this, especially of late, look at the momentum leg down. Look at those 3 big expanded range candles before it ultimately started bouncing. Now, to me, if this were a strong demand zone as far as buying, if that were a strong demand zone, then it should come into the zone and bounce immediately, meaning like a basketball. It should come up like this, right? But instead, what did it do? It just consolidated and went sideways, right? So we're in a consolidation, a 2-day consolidation to the left, to the right. Yeah. Daily looks a little better. Yeah. But that's the starting point. And again, for me, the strength is the confluence. So if I'm looking at a daily, I've got to step it down to a 4-hour. And number one, find a zone, but also I need to have that immediate bounce. And we didn't have that immediate bounce. But keep in mind, if we go back to that zone, do I have a gap in here on a 4-hour time frame? I don't. There's no gap. There's no acceleration gap, meaning there's no proof that we're having a very strong outweighing of demand over supply. Demand on a demand zone, obviously demand exceeds supply. But if I'm not even getting any gaps on some smaller time frames, to me, it's just a no bueno. Now, we did have one right here. You can see this 4-hour candle with a nice acceleration gap. Okay. This was very strong. Okay. There's our gap. And then obviously the demand zone, the 4-hour demand zone is kind of half in and half out of the daily, right? They're actually only about 30% in. But then what happened? Well, price came back and revisited that demand zone, the 4-hour, and it touched the daily. And then what happened? It lifted off. So this is why this zone to me is no longer what I would call, well, number one, it's not fresh because it touched. So it's mitigated, right? Mitigated. So if a zone's been mitigated, it's going to make me highly question it. Or it's sus. It's a little sus. It's majorly sus. But the fact remains, the trade is already over with. This was our old 4-hour demand. Price came down, touched it, and just lifted off. So at one time, yeah, this was a hell of a trade opportunity. But it's used up. And that's why now that price has returned, that's why it's just being boring for 2 days, right? Immediate bounce, then retracement back in the zone, and you need some sort of a balance. Yeah. I mean, look, if this, let's just pretend that we didn't get this mitigation over here. Okay. Number one, I probably wouldn't be buying it on a 4-hour. I'd be stepping up to a weekly, daily. Okay. Do I get a weekly, daily confluence? Well, that same area, again, it was a weekly demand zone at one time. Let's look at this. So this is our one-time weekly demand, which I always color orange. Okay. But what happened? It's already been touched. It's already been mitigated and lifted off. So I can't really use the weekly anymore. I have to step it down to the daily. Well, the daily's been touched. Okay. But let's just say, yeah, none of this has been touched, right? I'd be looking for the lows. Okay. Even on a weekly. Did we break a structure to the downside? So I would have to keep an eye on this little swing low right here. Oops, that's not what I want. I want that. So, okay, break a structure. Well, we broke the structure. Go back to the daily. Okay. Yeah, I mean, on a daily, okay. On a weekly, we're fine because we still have higher highs each time. But on the daily, yeah, as I said, I think yesterday, whenever you go into a trade, it's technically counter trend on the smaller time frame, whatever your smaller time frame is, right? So yeah, I mean, this is a potential spot to buy if this had not been touched, but I still would want to see a break of structure. So if I'm trying to buy from the daily time frame, yeah, I'd be wanting to step down to a 4 hour and a 1 hour and get that break of structure. So the best break of structure I see would probably be this point right here. Okay. So that's clearly a consolidation, a little bit of a spike up before the final drop. So ultimately, if I draw this out with my projection tool on a daily time frame, then yeah, I would be wanting to get a break of structure, and then a pullback to a newly formed demand zone. My buy point would be somewhere down here. So I basically need more information. I can't in good faith get into a trade even on a daily, even if that zone had not been mitigated. I can't get into it until it breaks a structure because it's such a strong downtrend. Okay? Even on a daily, it's a bunch of lower lows and lower highs. That'd be fighting it pretty hard. It's one thing to fight a trend or counter trend on a 5, 15 minute, 1 hour. It's another thing to fight a counter trend on a daily time frame, because keep in mind the daily is where the banks are at. The banks are playing on the daily time frames and higher. Okay, they'll probably step down to a 4 hour here and there, depending on the bank. I mean, some go into smaller time frames, but for the most part, guys, they don't care about the 5 and the 15 minute time frames, the 1 hour time frames. It's all about the daily for them. I personally do not want to fight a counter trend on a daily. I'm okay doing it on a 1 hour, on a 15 minute, because I know that that's where the retail traders are playing. I don't know. Hopefully I explained that okay, but yeah, for me, that's still a no-go, even on the daily, even if this zone had not been touched. Until we break a structure and act like we're trying to turn around, on one of these lower time frames. Again, I drew up 1 hour, 2 hour. It really doesn't matter. Okay, because you can clearly see the momentum move down. So let's retrace the momentum move. Ultimately, or again, you guys, I actually stepped down to the 1 hour. I'm sorry, it was the 1 hour. So yeah, the 1 hour. Let's break this structure here, because that could be looked at as a supply zone. Okay, let's draw up a 2 hour supply zone. Is that not a supply zone right there? Looks to me like a supply zone. It looks like a big doji right there. Now it's a supply zone, but it's not a good supply zone because we are bouncing into the rest of the daily demand, right? So ultimately, this would be my play if I wanted to buy that on a daily. Break the structure and then a retrace to a newly formed demand zone somewhere in here, right? Anywhere in here, really. Just a demand zone. That would be my play right there. And then this would be my buy point. Just like that. Okay, let's buy somewhere in that area. After we go to an even smaller time frame to make sure we're getting, even a break of structure on the smaller time frame. So really a break of structure on the higher time frame and the smaller. So hopefully that helps you out on that. You get it? Okay, perfect. I know that's kind of complex, Alex, but I could promise you after, if you stick around this game for a while, to me, it's second nature. It's just like learning a job or, taking a course or taking a class, going to college, whatever the case is. It's very overwhelming at first, but after some time, it starts becoming second nature. It's kind of comical and scary to me how quickly this stuff comes, because I remember I would spend hours on this stuff, even just on one asset, one currency pair back in the day. Like, God, it's taken me 10, 15, 20, 30 minutes to go through my list of odds enhancers on one chart. But now you get to the point to where you just look at it at a glance and think, oh, okay, that's in play or that's out of play. It's just like that. Your eyes will start eventually seeing what zones look strong, which ones look weak, Where's the momentum moves? Where's the structure point I want to break, like I've got here? Okay. Where's the volume at? Where's the divergences on my RSI, my relative strength indicator? Okay, is it matching up? Is the lower lows of price matching up with the higher lows on RSI, just as an example? So it's a, and again, I've kind of written down my list of things, right? Just going back over my trade plan real quick. Okay, this is a lot of shit, right? Is that not a lot of instructions right there? It is to a brand new person, but now I don't even really have, I'm to the point now to where I don't even have to really take a look at this very often. Sometimes I'll do it. Well, number one, let me just say this. So every day when my computer turns on, this is the first thing I see is my trading plan. So it basically is just there as a subliminal message. Hey, Tiger, follow your damn trading rules. The algorithm you created for yourself for a decade. It took me a decade to figure this out. Now I learned a lot of this stuff, whenever I took my Forex courses and my stock trading courses, okay, preceding that. I learned all this stuff, but it's one thing to learn it. It's just like reading a book. I don't know what the stat is. You read a book and you might retain 3% of it or whatever the case is. Read it a second time, you might retain about 5%. You read it a third time, you might retain 10%, right? It's just that snowball effect, or that the compound effect, right? Which, by the way, is one of my favorite books I've ever read. Incredible book, The Compound Effect, and I'm blanking on the guy's name. Darren Hardy, guys. If you're ever looking for a book to read that's not made, it's not a trading book per se, but it perfectly talks about the mindset you want to have as a trader because of the compound effect. Just little amounts, little wins added up, and your account eventually grows. So it's basically saying strong risk management, and just not trying to win the lottery every single time, which is where most people fail. That's why the 90-90-90 stat is there, because most people are looking at this like a slot machine. They pull the handle because they're trying for millions right away. But anyway, the compound effect is it's how I learned what I'm doing. I mean, I pieced all this together. You piece it all together, and then eventually this is all second nature, right? But because now it all comes down to that box right there, supply and demand zones with strong fair value gaps leaving the zone. That's it. Because now everything else is just kind of second nature. All the odds enhancers I used to use in the past, right? I don't even use them anymore, because it's just noise at this point. All about is this damn boring old naked chart, right? That's it, naked chart trading. And then, of course, I have volume spread just to see how much activity occurred at any one point. And then I don't even really use RSI as often as I use it, but I still have it on there. And then I keep the regular volume, because you guys know I bounce back and forth between Forex pairs, which aren't typically volume. Okay. That's what I use the VSA for, the volume spread analysis, the one up top. But then I also trade, obviously, indices and all that other stuff that has the regular volume. So anyway, blabbering, I'm getting off here. I got 9 minutes left. If you guys have any last minute thoughts or assets, for me personally, you know what? Euro yen, I think, just popped on the list. So let's go take a look at Euro yen for a potential short. Okay, so let's go to a 4-hour. I start everything from a 4-hour daily time frame. Is this nothing more than a big giant uptrend? Are we bouncing into a demand zone as we speak? Yeah, looks like it. Now, it's kind of a funny spot we're in, because as you see, we're bouncing into a supply zone and a demand zone all at the same time. Let's go all the way back. This is a weekly time frame, ladies and gents. Look at this. This is an August 1990 weekly supply zone. Okay, that's how far back we had to go to find supply. Okay, and that's currently where we're bouncing in over the last month. Right, so I have to be aware of that. And by the way, there's a daily supply right in the center of that weekly supply. That's that yellow candle. Now it's been on a very strong uptrend. So is this see, there's two ways to look at this. Number one, do I want to risk selling an asset that's just been on a tear when you look at it in this, in the aspect of the overall time frame? Do I want to buy at a do I want to see the fact that we've hit a very long-term support resistance point, right? This is a monthly. So it's really kind of a no man's land. It is very expensive, but prices tend to move from higher time frame supply zones to demand zones and vice versa. So it's kind of a conundrum. I think I just want some more information on this to make a decision on buying or selling it. Now, if anything, I'm going to sell it because it's giving me a fundamental and sentiment analysis bearish reading, right? But I think I just want to see it bust through this daily demand zone at minimum and close below it before a retracement to a potential supply zone for a short. I don't see anything on it right now just because of the fact that we're hitting everything. We're hitting everything at the same time. Higher time frame supply, higher time frame demand. So this is going to potentially just be a big old consolidation point for a while. And I don't even see a strong supply zone, even from just looking at it on a daily. Let's drop it down to a 4-hour just for kicks. Okay. Overlapping. That was a gap, but it hit right here and dropped. So this is all pretty efficient. Oh, what about right here? Take a look at that point. Let's get that out of the way. Is that a supply zone? Looks like it. Okay. But remember, overall higher time frame has just been going up and up. So here's our overhead supply. But we just bounced into a higher time frame demand, right? So I don't know if I want to be interested. Oh, by the way, it's already hit. So you guys see it's already hit right there. So this zone is now no longer good. I still want to keep an eye on it, but I want to lighten it to a light red, meaning do not make an entry on that time frame. But I would potentially use it as a take profit point if I were to have a bullish bias, but I don't have a bearish bias. So it's just in limbo right now. There's really not a play at all. I'm going to pull these zones forward just for the future. And then we'll just ignore the hell out of this. Could we look at this on a smaller time frame? Well, again, I want to see this break a structure, this break of the demand zone first. And then at that point, we could potentially even go down to some smaller time frames. There's a 15-minute time frame. Okay. We could look and try to see if we can find 15s or some 30s or maybe even a 1 hour, maybe a 5-minute supply zone. But currently, there's nothing there. Guys, there's really not a play, I don't think, at the moment. I think Bitcoin was on my list for a few minutes yesterday before it ultimately fell off. Hopefully this news that we just got will help us out. Take a look at this. We did get the release on the employment change. Okay, so there we go. So non-farm employment change, okay. The previous number was ugly, but then they projected 49K. So we actually came in a little soft. So this is always the thing, and I'll kind of wrap up, I think, with this. But this is always the thing to keep in mind. So the previous reading on this report was ugly. It was negative 29,000, okay, on the employment change. Now, we had a 41,000 increase, which is way higher than minus 29,000. So why is this not a bullish report? Well, because it all hinges on the relationship to the economist forecast, right? So they thought it was going to be even better. So they projected one thing, and remember, it missed projections. It grew over the previous report, but it missed projections. It missed expectations. So this comes in as a bearish reading for the US dollar. Okay, this is the report we just got a half an hour ago. So let's just take a look at dollar yen. Okay, dollar yen is usually what I like to, and we'll look at the dollar index as well. And we'll just kind of call it at that point. So let's go to the Dixie. The Dixie. Okay. Did it really affect much on the Dixie at the moment? Not really. Okay, a little bit of a decline. Okay. A little bit of a decline on the Dixie index. Now, obviously, we kind of bounced into some zones as well. Go to a daily real quick. Yeah. So overall, guys, on the Dixie, on the dollar index, we did bounce into a daily demand a couple times actually. So, but kind of like that last asset we just looked at, we have an overhead supply right next to it. So it's kind of this contraction point. So I just basically want to see what happens when the Dixie either, closes above either this overhead supply or this underneath demand. So I can't really make a great judgment out of this, but even if it breaks on the top side, we got another demand up here. So we got all kinds of support resistance potentials. Okay, all kinds of roadblocks. So let's just go to the dollar yen, since that's one of my favorite pairs to judge the reaction of a dollar move by. Take a look at this. For me, 7:15 a.m. is when this was released. So that would be this candle here where the volume spread analysis started picking up. It's a negative US report, which is no surprise. This report went down. Now, that's not a big move. Dollar yen moves 120 pips a day at all. So it's kind of a muted move, I would say, for that one report. Okay. And lost the screen again. But it's okay because we're about out of here just a second anyway. But yeah, just to finish up on that. That report by itself really just did almost nothing, is what I'm trying to say. So, yeah. Just to finish up, guys, we do have the JOLTS job openings coming up here later on, here in about an hour. We got the services PMI data coming up as well as the Canada IV PMI. So that's the last remaining high impact events today. Just be careful with the US dollar in an hour. Okay. Dollar-based assets, regardless whether it Forex, indices, whatever, stocks, just keep an eye on that report. Okay. And then other than that, keeping an eye on gold for the day and NASDAQ, just looking for some pullbacks into demand zones. And that's really the play for me. So with that, everybody, I hope that you have a wonderful day and stay safe. We'll talk to you later. Cheers.